Is the Bitcoin bottom in? I'm back from holiday and today it's time to once again start looking at the charts and start finding potential trade ideas. Today we will be going over the Bitcoin chart, Ethereum chart and INJ chart. Guys, I'm very excited to be back and I can't wait to dive into it. What we can see over here on Bitcoin is that Bitcoin is still range bound. We can see that Bitcoin has been testing the range low and is currently testing this quarterly level. Now, how do we determine the range? For the range, we always need 3 different pivots. Pivot number 1 is the all-time high. And then we have pivot number 2 and pivot number 3 over here. And we can even say that this over here is a 4th pivot. And then we have now found a 5th pivot over here as well, giving us a high probability range. What I first want to do is apply the fixed range volume profile over this entire range. And what we can see is that we are potentially creating a failed auction. We are not only potentially creating a failed auction of the value area low, in which we know that a failed auction of the value area low should lead to expansion towards the value area high, but we are also creating a potential deviation below the range low, right? In which we took out major sales and liquidity that was resting over here, okay? And we have been tapping into this bullish order block over here. And we have been testing it with a successful test. Usually I would say, guys, the range high over here, or at least the mid-range liquidity pool, so these equal highs, are next without a doubt. The only problem here is though, and you guys know that by now, is that the price action of Bitcoin has been creating a massive wick to the downside. Now what does that mean? It means that there still remains a drawn on liquidity towards the downside. And we know that usually these wicks, they tend to get filled at least for 50% or even for 100%. Now when we look at this wick over here, we can see that it's visible on the 4-hourly time frame. And when we start analyzing where the 50% wick fill level is over here, right, by applying it onto the chart like this and extending it to the right, we can see that the price action of Bitcoin has not filled this wick for 50%. If you guys want to know why these wicks are a drawn liquidity, 1 or 2 weeks ago, I uploaded a video on this wick filling strategy. So on a 4-hourly time frame, or I should say the 6-hourly time frame, we still haven't filled it for 50%. When we take the wick on the daily time frame, it remains the exact same. Haven't filled the wick for 50%. Now, what does that tell us? It tells us that, in my opinion, we have to be a little cautious. Do I want to be shorting near range lows? Definitely not. But do I want to long over here when we still have the drawn liquidity to the downside, when we are also creating this fake break of structure over here on a 4-hourly time frame, which means that we are engineering even more liquidity over here? Now, why is this a fake break of structure? Many people still don't understand this. It's a fake break of structure because the high over here that we are breaking through, that we are opening and closing candles above, did not bring us to a new low over here compared to this low that brought us to that high. So that means that it's not a significant high to break, which means that we are looking at a fake break of structure and people are longing the price of Bitcoin over here with their stop loss over here, which means that they're adding to the already existing liquidity pool around that 50% wick fill level. Now this tells me that I do have a trade setup that I'm willing to take. If we are going to test that 50% wick fill level over here, if we see another test of it, I'm willing to put a limit long order on that 50% wick fill level with my invalidation beneath this order block, and I will put another order at the 100% fill level. Why? Because of this fake break of structure, we are creating a valid inducement above the 50% wick fill level, which means that I'm willing to take a gamble here. I'm willing to not even gamble. This is just a strategy that you can apply onto the chart. And that second entry offers a beautiful RR of 8.33 towards the new all-time highs. That first entry offers a beautiful RR of 5 towards new all-time highs, which is both massive RRs and definitely worth it to risk 1 or 2% on this trade idea, according to the wick fill strategy, also according to the range strategy, because we know that quite often a first deviation of the range low is being followed up by a second deviation, and that can either be a smaller deviation like this, or we can even take out the low of that first deviation and then reclaim it and then send it towards the range high liquidity pool. And that for now is the plan on Bitcoin, but that doesn't necessarily mean that I'm 100% expecting downside. I'm not willing to short here. I'm just saying that if we get this scenario, then I'm willing to take the risk on a simple swing long position. Now let's go to Ethereum. On Ethereum, we're looking at a pretty interesting scenario as well, in which we also have a very high time frame, super clean range. Range pivot 1, range pivot 2, range pivot 3, 4, and range pivot number 5 and 6, giving us a high probability range. Now, when we zoom into the local price section over here, we can see that this wedge that we were forming over here, right? I'm not really drawing it too clean, but we had a clean wedge right there, broke out, and currently the price of Ethereum is once again, in my opinion, in some sort of a corrective stage over here, right? That corrective stage is leading to a first deviation below the mid-range, and that first deviation below the mid-range is leading to a second deviation below the mid-range. Now, this second deviation below the mid-range might send Ethereum all the way towards new range highs, right? When we look at it according to the range strategy. But we are still in a local downtrend on the 4-hourly time frame because we have a high, a higher low, higher high, lower low, lower high, lower low, lower high, lower low, lower high, and a lower low. So in order to really turn bullish on Ethereum, we need a shift over here. And that's not the only reason why I'm a little cautious over here. Also, when we look at the daily timer for Ethereum, what can we see? We see a big wick to the downside. And when we apply that 50% wick fill level, what can we see? We haven't filled the wick for 50%. When we go back to the 4-hourly time frame, what can we see? We are creating a fake break of structure. And we have another fake break of structure over here, which means that we have liquidity resting beneath this low, and we have liquidity resting beneath this low. And that means that we have a valid inducement above the 50% wick fill level. Now, the invalidation for Ethereum is not as clean as for Bitcoin, because I would say that the invalidation for Ethereum is all the way over here. But the target for Ethereum, instead of the range highs, can be a new all-time high, which means that if we are looking at a similar setup for Ethereum as we were for Bitcoin, we can set a first entry over here, invalidation over here. Second entry at the bottom of the wick. And at the bottom of the wick, when we apply that second entry and we use the same invalidation, right? This is maybe a little too close. Maybe you want your second entry over here at this order block, right? Before we got that impulsive move to the downside. That is possible as well. But let's say for now, we put it at the bottom of that wick and we use the same invalidation for Ethereum. And as a target, guys, we are going to use a brand new all-time high, which is around $5,000. That offers a massive RR of 6.5 from the first entry, and it offers an even bigger RR from the second entry of approximately 8.7. Definitely worth the risk according to the wick filling strategy. Not only the wick filling strategy, but also the range theory, because we know that a bigger deviation often leads to a second smaller deviation over here for the reclaiming before we send it higher. All right. Does this mean, since the drawn liquidity is to the downside, that I'm willing to short Ethereum? It definitely doesn't. I'm not going to short Ethereum. We can also squeeze higher from here. But it simply means that according to my strategy and according to my trading system, I'm only willing to hop into a longs on Bitcoin and Ethereum if we start filling the wicks for 50 or 100%. Now for INJ, it's a bit of a different story. What we can see over here on INJ is that I'm already positioned into a long position. Obviously, entry, stop loss, take profit targets, entire setup shared in the VIP channel in our Discord server as always. But when we look at this chart, it definitely doesn't mean that the bottom is in already. It definitely doesn't mean that there are still opportunities to be taken. When we look at the range, we see range pivot 1, range pivot 2, range pivot 3, and over here we have range pivot number 4 as well, giving us a high probability range. Guys, look at the range behavior. First, smaller deviation being followed up by a second bigger deviation. That leads to an impulse to the downside. First, smaller deviation leads to a second bigger deviation. Now we know that a second bigger deviation quite often leads to a second smaller deviation. So, is the bottom in for INJ? It can be. Beautiful test of the range low, right? And usually I would say we don't play these perfect retests unless we have a valid inducement above the range level, which we had over here, which is why my first entry was on the perfect retest. But right now, we are potentially going to be putting in a fake break of structure over here, which will engineer liquidity at that also perfect retest level. So in order to get into a trade on INJ, for those that are not in a trade yet, I would wait for a sweep of this low and start positioning yourself over here. Now, I already have a scenario in mind where I'm willing to tighten my stop loss and add another long position on INJ. If we sweep this low, get a push up, shift structure, right? Form a higher low over here. I'm willing to move my stop loss to this new local low, right? if we get this valid break of structure. And I'm willing to add another long position over here on INJ with a new invalidation because we have mitigated our risk over here and the same target. This is a very conservative target. Eventually I'm targeting new all-time highs for INJ. I'm not saying that the bottom is in. We can definitely still go lower. But if my thesis and my bias are correct, we can get another sweep over here, break of structure and push it higher. Or push it higher from here. Maybe the bottom is not in yet and we form a lower low. It's possible as well, but according to my system, this is a clean setup. And if you guys do have any questions, as always, feel free to ask me in our Discord server. The link can be found in the description down below. I want to thank you guys for watching. Make sure to smash up the like button, subscribe to our YouTube channel, and I'll catch you guys on Wednesday's video. Ciao, ciao! Besides Forex and commodity trading, PrimeXPT has now also introduced crypto futures trading. So you can now also trade Bitcoin, Ethereum, and a numerous amounts of altcoins. Next to the fact that I think that PrimeXPT should trade Forex and commodities with your own funds instead of trading at prop firms like Private Funded, I think PrimeXPT is the best place to do so. Make sure to sign up with the link down below in the description to receive a 7% deposit bonus.